Hi everyone and welcome to today's morning report on Wednesday the 13th of May with me, Richard Perry, market analyst at Tech Markets. The European trading session has got off to a positive start actually, and that's come after a bounce back on Wall Street overnight, which was driven by a slight decline back in bond yields again. The Treasury yields just into the close started to fall away again, and they've sort of remained fairly settled overnight, and that has helped to generate a bit of a bounce into the close on Wall Street, and that's followed through into the European trading session. DAX up 0.9%, FTSE up 0.7%, so pretty decent reaction there. In terms of Forex markets, the dollar remains under pressure really. The seemingly breakdown of this big uptrend continues, and the dollar continues to trade below that uptrend, and it looks like it's going to be pushing towards pressure on that support at 93.25. That has got implications for euro going higher and also sterling going higher, both of which are positive today. So it certainly looks as though this dollar correction trade continues on these charts, and I'll talk about that in a bit. There's a significant amount of economic data that we need to be watching out for today. We've already had the German growth data. That actually slightly disappointed at 0.3%, down from 0.5% expectation. But France was better than expected, and it certainly looks as though Italy has come out fairly positively as well. So the implications for Eurozone GDP at 10 o'clock are fairly mixed really. The expectation is for 0.5%, so could well be that France and Italy balance out that disappointment from Germany, but we'll wait and see how that goes. But it certainly doesn't look as though, certainly Germany being the big driver behind Eurozone growth, it may well be that it struggles to beat expectations, certainly at 10 o'clock today. In front of that though, we have got the UK unemployment data, and that's expected to continue to fall back to 5.5%, but the more interesting bit of data from this is the average weekly earnings. Average weekly earnings are expected to actually climb ex bonuses, so stripping out bonuses, that's expected to climb to 2.1%, and that would be the highest since 2011 if that was the case on a year-on-year basis. So that would be certainly reflecting that wages continue to improve in the UK. Slightly inflationary though, so that would hence help to drive, you'd imagine, sterling higher if that were to be the case. We've also got at 10:30 we've got the quarterly inflation report, which is out from the Bank of England. This is every quarter the Bank of England has its inflation report giving its projections on inflation and growth for the coming months, and certainly looks certainly in recent times this has been a big driver of sterling volatility during the day. So that's at 10:30 this morning UK time, so not too far out from here, and certainly is the expectation is, considering the slightly hawkish hint from the Bank of England meeting minutes last time out, that there could be a slightly more hawkish leaning quarterly inflation report. So that's at 10:30 this morning. Sterling is slightly higher ahead of both the employment and the inflation report this morning. And then into the afternoon, we've got the US retail sales, which last month was plus 0.9% on the month, but that was slightly below the expectation of 1.1%. And also that if the expectation of plus 0.2% is met today, then that would just show the continued decline in the year-on-year retail sales data that continues to fall backwards, around about 1% now on the data compared to where it was this time last year, which was around 5%, so significantly lower than where it has been in certainly last year. And recent months have also all missed expectations on the retail sales. So retail sales have had a significantly negative impact on the dollar recently, and that if that continues today, that could again be a driver of some of these Forex majors higher. So lots of data today, lots of volatility likely, and that takes me on to my chart of the day, which is the Aussie dollar. Now the Aussie dollar has yesterday had a strong move higher, and today continued that move, and it's testing this resistance once more. I've got this line in at 80.30, or 80.20 on this chart, but actually the resistance comes in at 80.30, and that is the level of support that we had back from January. It turned into resistance, and we haven't really been above that, not on a closing basis. You had a slight intraday spike above to 80.75, but there's been no close above that 80.30 resistance, so that is the key level that we need to be watching out for. In terms of the momentum indicators, though, there certainly has been an improvement. You look at this RSI that continued to fall over around the 50 area, but now it's finding support around the 50 area, and that is interesting that in the last few weeks that has been the case, and that would suggest that certainly momentum is improving. Look at the MACD lines, still improving, although just slightly coming together here. The stochastics have settled, but I still would say, although that's not as positive as the RSI, I would still say that that is relatively positive, considering they've settled around that 60 mark and not falling anymore. So it certainly looks on the daily chart that the Aussie is positive. Now on the hourly chart, what are we looking out for? Well, at 80.30 is the resistance, and look at this pivot level that we've got on this chart now at 79.50. Provided the resistance there, support, resistance again, and now is providing support. So it looks as though that dips towards that 79.50 are being used as a chance to buy. In terms of the momentum indicators, positive on the MACD and RSI, although slightly drifting back towards neutral on this recent consolidation. But I think that would be possibly seen as a buying opportunity, and certainly in the last couple of hours we've seen the Aussie starting to rise back towards 80 figure. We had a spike high of 80.09 today, and obviously that is fallen over again. But I think that what we could see is maybe if this I mean, when I wrote the morning report just earlier, we saw this just a rolling over this outlook, but it's just started to find support again. I think it's more of a consolidation really, and I think anything around 79.50 is probably your chance to buy if you get it today. But it certainly looks on the daily chart as though this the outlook is improving. As I said, just across the board, pretty much the dollar is under pressure still, so that would be playing into that sort of general theme of dollar pressure to the downside. So Aussie trying to break higher, and certainly if you saw a close above 80.30, I think that would be a big indication that we're starting to see the Aussie breaking out. So I wish you good luck in your trading on the Aussie today, and I will speak to you later. Thank you.